It did, right? I think there's a couple interesting storylines. I mean, there is a return in demand. There's no doubt about it. And if you look at our optimal blue data for January, you saw a bump. And then rates jumped again last week, and then you saw them step back in last week's data. So you are seeing this return in demand, but it feels very rate sensitive. And I think it'll be a bumpy road as we move throughout 2023.
I just don't understand how the difference between, 6.5 and 7% on a mortgage rate is really unlocking that much. It almost feels like people are insensitive, not hypersensitive to these rates. But you tell me, clearly I'm wrong.
Yeah, I mean, I think there still is sensitivity. And when you look at that pricing, I think there are borrowers that are priced out by these marginal movements in overall interest rates. And I think there's a psychological impact to some degree with rates rising and falling as well. But certainly a bump in January. I think it expected it went above what some of us were expecting in terms of overall volumes.
The other thing, Diana, that I've heard from realtors is them saying, look, there's a decent amount of demand out there, but that people should list their homes early if they kind of want to capitalize on it. So are we pulling forward demand possibly? Could it almost seem like, hey, we're off to a good start, but then it doesn't continue, Diana?
No, not from what I saw. This demand is not going away. There were hordes of people going into that house. The problem is there's just no supply on the market, and that's what the realtors are saying. They are begging people to list their homes. They're saying to people right now, look, spring started already. Get your home out if you want to sell it now. But interesting what you were talking about mortgage rates. The folks I talked to did not seem so upset about the 6.5% rate. They said it's down from 7.5% in the fall. Right. They were kind of used to the 6 now, believe it or not. And even some cash buyers I spoke to said there are so many other cash buyers on the market. They're not feeling like they have any kind of advantage.
No, I think that's absolutely true. And Andy, I was driving through town and there was, a backup on a road there's not usually a backup on. I thought that's odd. It was kind of right. It was like 1 o'clock on a Saturday afternoon. Well, it was because there was an open house and there were cars backed up trying to get into the driveway. And I've seen this house, by the way, was on the market in the past. It is not like the creme de la creme here. And that just tells me, to Diana's point, that there's still demand. So, Andy, if this all bears out, what does it mean for demand, for prices, for the market for the next couple of months, do you think?
Well, I think the interesting part, and Diana touched on this as well, is the supply component here, right? Because we are seeing a deficit of supply, and it's actually gotten worse. We saw 25% fewer homes listed in January than we traditionally do, and we saw our deficit of inventory go from 38 to 43%. And so part of it is you've got demand coming back and there are fewer homes for sale out there. And so when you look at what that potentially could mean for the spring buying season, it means you could see some hardening of those prices that had been falling in each of the last 6 months to round out 2022.
Which would be crazy, which would be feed into this narrative about the Fed that certain things aren't softening as much as they were supposed to. Very interesting. We'll leave it there, guys. Thank you both. We really appreciate it today.